Hey guys, Ryan with the Ryan Smith Home Selling Team here to talk about today why real estate deals are falling through at record numbers. Let's talk about it next. So one of the things I've heard from so many real estate agents, and I've also experienced this myself, is that it's so much harder to get a deal to the closing table than it used to be. Right now, even sometimes what would seem like trivial things are causing real estate deals to fall apart. And nationwide and locally, there are more deals that are falling apart than there have been in many, many years. So why is this happening? Well, right now, the biggest story there in the housing market is there's a motivation gap. And that motivation gap is happening because buyers feel like houses are too expensive. Like they feel the pain of having a 6% interest rate on a mortgage at a house that is now selling for much higher than it used to. So the buyers are feeling that affordability issue and they want these houses to be cheaper. Sellers, on the other hand, are still trying to hold out and hit record numbers like they did in the pandemic, right? So they're trying to still get high numbers that they're probably not likely to get. Add into that fact that right now that there's a lot of sellers who have a super low interest rate and then choose not to move or sell. That's going to bring the number of deals happening as a whole down from that factor alone. But just because of that tension right there, where the sellers are hoping to get more money, buyers feel like they're paying too much. And so you enter this real estate deal with this tension and stress where one side is feeling the pull to try to get more and the other side is feeling the pull trying to get it for less. And that friction is probably higher right now than any time that I can remember in the recent future. We're also seeing much fewer bidding wars, and we're seeing a lot more price cuts. Think back to 21 and 22 when everything was going crazy. Sellers called the shots. They were in charge of this process, but that has definitely changed. So without these bidding wars and all this energy of people coming after houses, sellers can't just afford to put their price out there at a high number and let it sit anymore. So that shift of the market moving has given a lot of buyers more room to negotiate. But it also means that in taking that time to sell is going to increase, right? So the time that they were able to put a house on the market a few years ago, it would sell much, much faster than what it is in today's market. So if you're buying a few points from that, these fewer bidding wars, more price cuts, these sorts of things, if you're buying, you don't need to feel that pressure to move fast. You may not have that competition like you did back then, and you can make a more thoughtful and intentional offer and realistically, with the market the way it is today, get a better deal than what you would have. And if you're selling, very, very important, you really need to review your market comps on a weekly basis because houses are all competing for the buyers that are out there and your competition may be dropping their prices underneath you. If showings are slow and you're not getting that attention, it's always better to adjust the price sooner, to make that shift sooner. A smaller correction could save you weeks of just sitting out there on the market and not selling the house. Number three, something that's also affecting consumer behavior is just the time of year it is, right? So we are headed into the winter. And even though mortgage rates have dipped a little bit over the last month, that really hasn't sparked a buyer's rush. Instead, it's actually brought a few more sellers to the market chasing after those buyers. So if listings continue to outpace that buyer demand, we could see prices level off or soften modestly heading into the winter. That's good news for long-term balance in the market, potentially, even though I might argue that we're kind of already there, but it's certainly frustrating for anybody who's trying to get a quick sale. So, and add on top of that, Christmas and the holidays, these sorts of things, it's always going to slow down the market just a little bit. And then interestingly enough, there's also a very large regional divide nationwide. So take, for example, the Midwest. It's showing surprising strength, and that's thanks to local job growth and homes that are still relatively affordable. So you can still buy a house in cities like Cleveland or Detroit on a median income, which keeps that demand steady and holds that market healthy. However, if you look where we are in Texas and in Florida, where many new homes were built very recently, Texas and Florida, we are really starting to feel that strain of having the oversupply of inventory. Prices are cooling here, especially like in condos, newer subdivisions, and resale home prices as well, because as new construction's cooling, new construction's dropping prices. As new construction drop prices, it affects everybody. It is very interesting whether you're buying or selling. It really may depend on which region of the country that you're in to what effects you do or don't feel for what we're going through right now in the market. But what I can tell you what's happening right now is it's not a housing crash, right? The market is not crashing. This is a reset. So deals are falling through not because the market is broken, but because the market is really rebalancing after years of just runaway demand and unrealistic expectation. If you'd like to talk more about your options of buying a house or what it would look like for you to sell your house in 2026, please reach out to us. You can reach us on our website at www.ryansmithhomes.com. Of course, we're going to be all over socials and Instagram and Facebook. Or just call us at the office. That's 254-213-5335. Once again, 254-213-5335. This is Ryan with the Ryan Smith Home Selling Team. Always an honor to be here and visiting with you. And we'll catch you on the next one.